we had an indecisive candle. The body was basically absent. The open and close was essentially the same thing. If we have that and the market's trading down into a discount, even though we might have a low down here that we're targeting, this may require a retracement. Now notice at the close of Monday's trading, we had an imbalance from this low and this high. On Tuesday's trading overnight, the equities markets had a run up into this imbalance here. So this fair value gap was retraded to in here. This low and this high, we'll look at that in reference to the lower time frames. This lower level is the low end of the fair value gap on a daily chart. And this level up here is the upper end of the fair value gap. I'm taking your attention to Monday's trading. And I want to talk a little bit about Power 3, which is accumulation, distribution, and manipulation. Okay, so generally my teachings are like this. If I'm bullish, I'm expecting the opening price to be near the low of the day or the session. Then it trades lower, making some important low, and then rallies, creates a high, and then closes near the high of the day. Now, it's not important for you to try to predict the closing price. What I'm trying to train you to anticipate is the likelihood of the market making some kind of a fake move, like a Judas swing. Okay, Judas swing is the false move. Typically, in London and in New York session, there are fake runs that start off a move. And I walked you through it last week on my community tab, where I outlined the actual Judas swing for that particular day. Using the fair value gap, outlined the low. I was only off by 1/4 of a point for the low end of the range, and it created the low of the day. The idea is what I'm going to show you here as well. On Monday, we had price drop down overnight, consolidated, and then we have a little bit of a rally ahead of the equities open. Okay, so in here, we have 8:30 in the morning. If you look at 8:30, what do we have? We have the highs over here. They're suspect because they're relative equal highs there. But look what we left here ahead of 8:30. We had this huge imbalance. So if we run these highs out after the open at 9:30, it's likely to trade down into that and rebalance. But watch what it does. And we trade up into that level here, which creates the fair value gap's low end parameter. Remember, this is Monday's trading. It sells off. So this line isn't here on Monday. That's not what we're looking at. We're looking at the likelihood of coming back down into this area here after taking these highs out. If it does so, if it trades back into this imbalance, that's a good candidate to go long. Now, the imbalance in here, if you go to the left of it, you can see the down close candles. That's your bullish order block. The market trades down, hits the order block, and it's an afternoon trade, so it starts to rally and then consolidates into the close. Overnight, we create a wicked run last night. It ran last night, and most of all the move for today was done before we even got to the opening of the morning. Had a little bit of a retracement after 8:30, and at 9:30 we consolidated. I'll talk a little bit about that as a market profile in a moment, but then we drop down, create an important low of the day, and then we rally. It got real close to the fair value gap's high end parameter, but didn't get to it. We don't need, it's just like I was mentioning here, you don't need to try to predict the closing price with Power 3, which is accumulation, manipulation. So in other words, if you're bullish, it opens where you think it's going to trade higher. It's going to be most likely a small little move lower. That's the move you want to try to go in and hunt along. If you miss it, you want to try to get long real close to where the opening price is. Now, the question is going to be where's the opening price? Well, I like 8:30. Okay, you can use the opening price here at 8:30. Draw that out in time. Did we go below it? Yes. Did we go inside the imbalance? Yes. Did we take out a short-term low? Yes. Did we hit an order block? Yes. Was it an optimal trade entry? Yes. Lots of factors there. Over here, same thing. Opening price here. Did we trade lower than that? Yes. Did it go even lower than that later on in the afternoon? Yes. And then it rallied, taking out the relative equal highs here. And again, gravitating towards that upper end of that fair value gap on the daily chart. Now I'm in a 5-minute chart on that same February 14th, and I want to take you closer to what price is done in here. That imbalance, the lowest portion of it here with all the down closed candles here. Now this is anchored to the daily bullish order block, but you can see how we traded into it here with 1, 2, 3, 4 down closed candles. That is a complete order block on this time frame. So consecutive down closed candles right before a price surge that has an imbalance. That's how you find your order blocks. Okay, so a high probability order block would be your narrative or your bias is bullish. You're looking for displacement. That's this right here, where the market runs real quick higher. And the down closed candles, you want to mark that out and anticipate a return back into that. Now again, this level is not there yet. We don't know this level until Monday's close. So don't be tricked thinking that I have this level here and I knew it was going to go right to that level and turn. I'm not suggesting that at all. What I'm suggesting is watch what happens when it creates that high. It breaks down. All of this price action here gets overran into a retracement back down into this imbalance here. The low of this candle and the high of this candle, that right there, that's your fair value gap with an order block and optimal trade entry. Rallies, even though it's sloppy, it's still continuously driving higher. This high at the close on this day here at say 4:30, okay? 4:30 in the afternoon, to me, that's like the close for me. Now, it trades a little bit later than that and then closes for a little while. And it also technically closes when the bell rings at 4 o'clock p.m., local time in New York. Because there's a little bit of trading past that, I like to just look at 4:30 and just consider that where we are in terms of what we've done for the full range and then determine what I have left for maybe imbalance or liquidity pools. Here is that drop down here on a 1-minute chart. It's digging into that order block right here. If you look real close, let me go back up one slide. I want you to see what I'm showing you here. Right here, this price action, see 14,140, 14,120. This little area right here, I'm looking at on a 1-minute chart. 14,140, 14,120 in that vicinity. See that small little gap right there? See that? See the swing high? We trade above it, create a fair value gap there, trade down into it. This is an afternoon trade. This is 2 o'clock in the afternoon, local time in New York, inside the order block, inside the fair value gap, inside a retracement of the fair value gap that sets the stage of a market run up into a higher retracement. Now, we don't know if this is going to be the closing parameter for a daily fair value gap. We don't need to know that yet. But this is a likely scenario to go long. And we can look for a run back up into this range here, or run the buy stops above here, or maybe inside here. Sloppy run, but nonetheless, it's still pressing higher.